Hello, everybody. This is Frank, Iron Age News on the South Florida Conservative web source for your news. And today we are going to talk about what is occurring in the financial market this morning, or what will not be occurring in the financial market this morning, depending on what time this comes up. There was a prediction over the weekend that the market would have a significant drop today. It was expecting the Dow futures to fall somewhere around 350 points, the S&P, the NASDAQ, which is the home of all the big tech stocks. Everyone's taking a hint. Crying, pulling of the hair, throwing themselves out of the windows. Not really. This is all based on the fact that Moody's has downgraded the United States debt for the first time in quite a long time by one degree. Also, so is this S&P and Fitch. And let's talk a little bit about this. Now, you may have heard about this whole issue before. So if you saw The Big Short, if you saw any film around the time of the mortgage-backed security crisis, you realize, or you should realize, that Moody's and these guys telling you things may not be gospel. Okay? They want you to think that they're the wise men of Wall Street, that they're the referees, making sure everything's clean and safe. Well, let me remind you, right? Just as we just said, these are the same guys who told us in 2006 and 2007 that mortgage-backed securities, the junk that almost collapsed the world economy, were AAA rated. They rubber-stamped financial garbage. And you know why? Because they were getting paid by the people who created the garbage. So let me repeat that. The ratings agencies get paid by the issuers. All right. And that is important to know. If you are not familiar with finance, you better start to get familiar with finance, because the United States is positioning itself in its old seat post-World War II, and we are all along for the ride. And if you see what is going on, maybe you make a couple dollars, right? Maybe you don't, but maybe you will. Okay, so the ratings agencies get paid by the issuers. So if Goldman Sachs wants to issue 10 billion in bonds, they call up Moody's or Standard & Poor's and they pay them to rate it. Is that a conflict of interest? Yes. And nothing has really changed since 2008. So yes, we'll agree to a couple of things. Our national debt is insane. Yes, Congress spends like a drunken sailor on leave. And, why now? Why did Moody's suddenly decide to downgrade the U.S. outlook? Could it be the financial system needs a little chaos to reshuffle the deck? Could it be that certain trading houses are positioned to make a quick buck if the market dips? You see, when you panic and pull out of stocks or sit on the sidelines, guess who buys the dip? Each of these big houses has its own desk that buys for the house. It's not that they're just in business to make sales for you. They also buy for themselves. So exactly what I'm talking about. The same people who helped cause the crash in 2008 and walked away richer than ever are doing the same kind of thing again. We saw this earlier in the year when we had that downward pitch, and then there was a right before the tariffs, right? And they said, oh, Trump's people made money. No, who made money on it were the big trading houses, because they were given 4 or 5 days notice that this was going to occur. If you had a sample AI finance program and you typed in the information that Donald Trump had given you 4 or 5 days in advance of what his policy was going to be, it would have given you a series of things to do. It's not really just like buy AT&T stock. There's futures. There's a lot of stuff that I don't really know myself, but I'm learning. And that's where the money was being made. So as it slipped down, the brokerage houses were making money. The thing that they should have investigated and did not investigate was there was a rumor that was put out as legitimate fact that the Trump administration had said, no, we're not going to do any of these tariffs. And there was a momentary spike up again until somebody said that's not true. And then it went down. So whoever was responsible for making that statement And then whatever news agencies back that as gospel were probably complicit in stock manipulation or futures monopoly manipulations. They were the ones that were making some dirty money there. So I'm not saying to you to ignore the warning signs. We do need to fix our fiscal house. We are on an unsustainable path with debt, which is why you see the cutting and the slashing and the this and the that that's going on out there. We haven't even talked about the new deal that's going to probably occur on Section 8 and how it is actually incredibly powerful to help the people that are in poverty get out of poverty, but they're not going to see it that way, right? But don't confuse the Moody's downgrade with a prophecy. They're not economic prophets. They are corporate consultants that wear the little mask of academia. And today's bad news might not be, it may be nothing more than a strategic move to shake the tree, scare the public, and move the markets just enough to help the right people cash in. Because as you have seen, on unusual whales, things of that nature, the people that are supposed to be protecting us from the outside are doing none of that, are cashing in and making big money on it. So what can you do? You can stay informed. Don't make decisions out of fear. What you have to learn in the stock market is, hold stock. Stock is not a one in the today, out tomorrow, unless you're a very specific type of person. That is called like a day trader. And that is really not what you shouldn't buy things along those lines. You buy them to hold them, knowing that they're going to go up in value. Okay, that's why they have the blue chips. They're always going up, or they're always making some type of dividend payment. Okay, well, we'll get into that. But if people like to hear about that kind of thing, mention it in the comments section. There is a fellow that I can recommend to you who has just started out his own Substack. He was a very well respected financial academic. So we can get that straightened out for you. So like I said, stay informed. Don't make decisions out of fear. You're on a long game here, not headlines. And you ask, who benefits from this panic? Okay? Because chances are it's not going to be you, and it's definitely not going to be Main Street. All right? It's the same people who helped break the system, and now they want you to believe they're the ones that can fix it. So that's pretty much all I can tell you about that right now. So stay sharp. We do not offer financial expertise to anybody for investing because that's not our thing. We're not that shitbag Kramer from whatever show he was on, ESPN. That embarrassment. Investing your money is not a game. You have to learn what has to be done. And a lot of it, you should not leave to your broker. If they start with you, there are things you may have to learn. Take some time, read some financial magazines or journals or whatever's out there. And anybody who tells you can make it overnight, ignore them. The people that can make that kind of money overnight had that kind of money to begin with. If I churn the market with a $50 million investment and I make $1 on every share of my 50 million, that's how come I have $50 million. Okay. So don't get crazy. This is, once again, the administration, the Trump administration is trying to set us on the right financial path. And there are so many people out there who will not benefit in the short run for it, that they are all about screwing the United States people out of the, like he says, the golden age, out of the financial recovery that we all deserve. So that's pretty much it. Have a good day, and we'll talk on later.